I'm not just going to do earnings from some Mickey Mouse company. I will do earnings, though, from the Mickey Mouse company. Disney reported earnings today. It was fairly interesting, to say the least. Disney has a lot of properties. They own Marvel, Star Wars, Disney owns Pixar, they have all sorts of theme parks, they do movies. Disney's everywhere. They're ingrained in your life. If you grew up in any culture, you know about Mickey Mouse, Donald Duck. There's no question in my mind. Disney's not a company that's struggling, let's say. They're a pretty fledgling organization that seems to always lead in whatever industry it is they seem to pursue. This earnings call wasn't the greatest, but we'll take a little closer look. Earnings per share came in at $1.58. That beat the street by 3 cents. Revenues of $14.24 billion, missed by $180 million. That's off by a pretty nominal amount, 0.3%, which could be really give or take at any point with a company this large. Now, Disney went out and acquired most of the balance. They're the majority owner, up to 75% now, of a company called BAMTech. Now, this is a company in accordance with Major League Baseball and Major League Baseball's media. I know a lot of people back in the last couple of years were saying how great Major League Baseball's digital media was. It's phenomenal on MLB.com and all that. And BAMTech is a part of that. So they're definitely a part of the delivery of the digital media stuff. And now Disney, who already owned 30-some% of it, has acquired the balance to make it 75 and make them the majority owner of BAMTech, bringing that digital media property into the Disney fold. That came with the news also that they were pulling out of Netflix. As the Netflix deal ends, which I would imagine is going to run roughly with this 2018 opening of a brand new Disney streaming service. That's going to be partnered with a brand new ESPN streaming service. That ESPN streaming service, they say, is going to have upwards of 10,000 live sporting events in the first year that aren't going to be the same ones that run on the television sets on all of the ESPN channels. So you can only imagine the depth of sport that you're going to get through this ESPN venture, this venture into streaming services, and who knows how far it's going to go. Who knows what sports could take off out of this? Who knows who could get big, who could make money? You could turn a sport that maybe is a niche sport at this point in time into something that makes household names. Who knows what could happen with this, because this streaming service would then allow people to go and choose what it is they want to watch. You're not going to have to watch what's on the television set. Let's say you and I get together and decide, I like the skeleton. You know what that is? That's Winter Olympics, where you're basically a human cannonball down an ice graveyard shooting towards your final doom. And let's say a lot of us decide, you know what? I like watching these guys rocket towards fate. Maybe we turn that into a hit. ESPN streaming service that has 10,000 unique sporting events the first year is probably going to facilitate that. You then take a look at Disney doing the streaming service now, pulled out of Netflix. Gone from Netflix. That's got to hurt Netflix. I'm sure we're going to be talking about that in every Netflix conversation we're going to have for a while now. But Disney's going to do this as well. Now, does Disney get into a lot of original properties already? They do. What are the odds that they can do it on the level that Netflix does? The odds are probably better than Netflix. Disney consistently comes out with media that people want to be invested in, people fall in love with, that set trends. Generation over generation, Disney knocks it out of the park. There's no question about that. There's nobody out there that's going to debate me on Disney's longevity and their magnitude, the impact that they cause in the marketplace. They are significant to what drives a lot of kids' memories. That's huge. That's huge. When you can touch that and you become something that is ingrained in someone from when you love what you loved when you were young. You know you do. I know I do. A lot of it's Disney. What isn't Disney is Marvel and Star Wars, and that's Disney now anyways. Everything I love is there. They own it, and they continue to do it consistently. Now they're going to have a streaming service where if you think they're not going to come for you, Netflix, I'm betting they will. I'm betting that that's exactly what the plan is to say, you think you make better original content than us? The theater system is a dying industry. We lost 16% revenue this quarter in studio stuff. 16%. That's terrible. That's terrible. The revenues for that are down 16%, but they're down a lot of quarters recently. They're down for all the studios. They're down for every cinema out there. The numbers consistently show that Netflix is where it's at. Why wouldn't Disney prove that they can do it better, or at least attempt it? They've got the track record. If anybody has the track record, Disney definitely does. What else did they do? What else did they do in the earnings call? The parks. The parks made a lot of money. $4 billion, $4.9 billion. It's a third of the revenue, roughly. They're up 12%. The parks always are. The parks and resorts that Disney have are money generators. They're up quarter over quarter over quarter. You take a look at them and they consistently hold up laggard divisions of Disney on a consistent basis. I mean, there's no two ways around it. Disney's parks are amazing. Have you ever been to Disneyland? I mean, come on. I went to Disneyland over 20 years ago now, and I remember it like it was yesterday, and I don't remember yesterday. I don't remember yesterday. We have something else to look into here. But beyond that, Disney, I remember that. I was there. They create memories. Disney's doing a hell of a job. EPS of 158, beat by 3 cents. Revenues of 14.24, missed by just under 200 million. Down nominal 0.3, but they buy up to 75% now of BAM Technologies. The guys doing a heck of a job for Major League Baseball's media division. Yeah, Disney, they wish a lot of their other numbers were higher. The merchandise is down. They wish a lot of the other numbers were higher. They're down almost across the board, but this moving out of Netflix, moving into streaming, this could be a game changer because there's nobody that dominates content like Disney dominates content.